Good days to all participants. Welcome to the Risk Conversations webinar of the Geneva Association on the topic of connecting with insurance customers through digital platform ecosystems. My name is Alex. I'm the research director responsible for the digital technologies topic stream at the Geneva Association. Digital technologies are changing how we manage our lives, from the way we find information to the way we shop and use financial services. Digital platforms such as social media and online marketplaces facilitate interactions and transactions between parties and are becoming the dominant business model in the digital economy. And participants in these platforms connect and interact with others to create digital platform ecosystems. And exactly these digital platform ecosystems enable insurance to be embedded into the purchase of other products and services, and interactions between insurers and customers are made quicker and easier by these digital platforms. Today, in today's webinar, we will look how should insurers pursue digital platform ecosystems opportunities, and what are the merits of different approaches, and how will digital platform ecosystem in insurance look like in the future. Before we start, I would like to introduce the speakers today. The first speaker, Ms. Camila Serna, and she is the Global Head of Digital Acceleration at Chubb, and the leading developer of Chubb's digital platform ecosystems, that is so-called Chubb Studio. And second speaker is Mr. Simon Torrance. He is the founder and CEO of Embedded Finance and Insurance Strategies, and is an independent expert on digital platforms and ecosystems. Importantly, he is the author of the book of Fight Back: How to Win the Digital Economy with Platforms, Ventures, and Entrepreneurs. Our third speaker is from Europe, Johannes Walder. He is an investment manager at Allianz X, that is a specialist investment arm of Allianz, which invests the ecosystems of insurance and asset management, and it builds the partnership and platforms around those investments, for example, simple insurance. Our last speaker is Dr. Xiao Jing. He is the Group Chief Scientist of Ping An Insurance Group, and he leads the digital platform development, among other technologies, in the Ping An Insurance Group. It is the leading player in the field of digital platform ecosystems in insurance. Here is the agenda for today. First, we will provide an overall assessment of the key considerations of insurers as they develop and use digital platform ecosystems. We will share this key message with the new published Geneva Association report. Next is the main part of today's webinar, that is a panel discussion around the speakers, and followed by a Q&A from the audience. A few housekeeping points before we start. First, I would like to say a recording of this webinar will be shared with all participants after the webinar finishes. And in the last 15 to 20 minutes of the webinar, we will open for audience Q&A. And please feel free to submit your question either using the icon of raise hand, and then you ask the question live, or alternatively, you could use a written question by clicking the Q&A icon to submit your question in writing. Last but not least, it is the very first time, and the Geneva Association is offering real-time interpretation. If you want to use this function, you could activate it by click Show Captions at the bottom of your screen. That should be next to the Q&A, and then enable the translation. You can actually select your preferred language. I think at least 20 languages are possible. Now I would like to share some of the key messages from a recently published Geneva Association report on digital platform ecosystems in insurance. You could scan the QR code to download the full report, or there is a message in the chat box. You could click the link. You can also download the report. The full report is available in English, and the key summaries in English, Japanese, and Chinese. Now I would like to share some of the key findings from the report. Digital platform ecosystems are actually changing the way that insurance is delivering to our customers. First, as I mentioned, the insurance can be embedded into the purchase of other products and services, and the interactions between insurers and customer become easier and quicker. We believe that this digital platform ecosystem will have a big impact on the insurance market. For example, various market research companies suggest that by 28 or 29, that the global digital insurance platform market will reach 150 to 300 billion US dollars, that accounts for 3 to 5% of the global insurance premiums. And importantly, over 80% of surveyed Geneva Association members in this report are very familiar with the concept of insurance platform ecosystems and have already engaged with digital platforms, 80%. And we also have 3 strategic recommendations for incumbent insurers. First, we encourage all insurers, either domestic, international, life and non-life, to embrace the platform economy and engage with digital platform ecosystems now. And it's a very clear message. And the second is that we believe that larger insurers should develop their own platforms, but smaller ones, maybe it's wise to collaborate with existing platforms to optimize the resource and market reach, the balance between cost and market reach. We actually create a new term. I like this term, but many of the players, they might have their own different terms to describe what is a digital platform ecosystem in insurance. I name it insurance platform ecosystem. I think these 3 keywords just add together. It represents exactly as this picture shows. It is a digital platform that interacts with customers. For example, it can be a smartphone app or a website. And it needs a multi-supplier ecosystem that integrates various services and products in one site, consolidate everything together, where information is exchanged. And importantly, transaction needs to be made on this platform, on this ecosystem, within this ecosystem. And the third piece is that's relevant to insurance, right? Insurance transactions needs to be made on these digital platforms and between participants in the ecosystem. So when the 3 elements can come together, then we call it insurance platform ecosystem or digital platform ecosystem in insurance. What are the business models that insurance company can approach the platform ecosystem? In general, we broadly categorize them into 3 models: orchestrator, co-developer, or partner. So these are the roles of insurance companies, existing insurance companies. For orchestrator and co-developer, we believe that are a high investment and a high return model. The benefits of that is no need to adapt to the ecosystem-specific service standard and business model. And the insurance company maintain the control of the customer base and maintain the self-branding. These 2 strategies are probably suitable for early movers and large insurers. Well, partner insurance as a partner. It's a small investment and quick return option. It certainly increases the strategic flexibility and allows access to new types of customers and test a new pricing strategy. It's a good way to test a new pricing strategy and products and services in different market segments. This is suitable for most incumbent insurers. Of course, some insurance company, they can do both or all of three of them. They could simultaneously have developed proprietary platform ecosystem and participate in a third-party platform. They can do both at the same time. Of course, whichever strategy, it requires very careful consideration and cost-benefit analysis. We appreciate these 21 Geneva Association members that are taking our survey, providing both qualitative and quantitative feedback and input. And we also investigate 6 case studies from Europe, Asia, and the US to analyze in depth what are the business model of existing digital platform practice. Actually, we have 3 of them today as our speaker from Chubb, Ping An, and Allianz. Right, here in the next 4 pages, I quickly share some of the survey results. It's only a small portion of the overall results. You are encouraged to read the full report if you're interested. So over 80% of existing insurers have already collaborated with a tech firm or platform company to build a platform ecosystem, build a platform. And 60% of them, of course, 60% of the 2021 is a bit large companies, so have already developed self-developing their own insurance platform ecosystem. And around 50%, they're joining other internet platforms. And the primary motivation for most insurers, either it is property casualty, life, or health, they pursue a digital platform ecosystem primarily to expand access to customers and improve customer experience. So customer-driven motivation to engage with digital platform ecosystem. And the criteria for existing insurance company to select their collaborating partners, I think 2 considerations are at the top. One is the technological expertise, the digital competence, and the other is complementary products and services. So that is what the insurance company cannot offer. So that I expect my collaborating partner to do. Next is what are the challenges for existing insurance company to work with digital platform ecosystem? The only top challenge is the integration with existing legacy IT system. So we observe this challenge also when other new technologies are applied. For example, blockchain technologies and other, maybe AI in the future. So there's always a problem that how to integrate with existing existing technologies. So this is a picture summarize the 6 case study, the results. We believe that if the insurers and platform providers, the boxes are the benefits, and the red box, the gray box are the benefits, the red box in the middle is the challenges and limitations. We believe that if the insurers and platform providers, they can work together to really utilize or realize their benefits and overcome the challenges in the middle, then they could create and deliver value to customers. And this slide summarizes a bit the future trends that we find during the research. One is that digital platform ecosystems will continue to assume a bigger role in insurance business model. We believe so. and possibly also gain a larger market share. Fundamental changes to the way that insurance product services are delivered, including particularly to those currently underinsured. And insurance will continue to be increasingly embedded in other products and services to attract customer attention and boost engagement. Non-insurance players and digital platforms may gain in importance in the insurance playing field. We will see some new entrants from other industries, and insurance intermediaries may be a little bit under pressure because the platform have some role overlaps with the insurance intermediaries. So this is my last slide to share some recommendation for the insurance companies. For all insurers, seamless integration with existing systems and processes seem the top important item. How to do it and how to address this problem is a critical challenge for all the insurance companies. And for insurers as orchestrator and co-developer, so they are the leader. So it's important that they can maintain the attraction for sufficient customers. Insurance products itself is certainly not enough. We need to rely on other products and services to maintain the attraction and maintain the frequency of touching on the smartphone app to attract the customer to look at the insurance services and deliveries. And for insurers as partner, probably a smart strategy is to join an established high-profile platform ecosystem with broad presence and diverse customer base. This is particularly true for small and mid-sized insurers who only want to be a partner in the platform ecosystem instead of developing their own. So join a high-profile one. It's probably a good strategy. So that's the end of my key message. Now I would like to jump into the moderated discussion. So we will before we start the first question, we will have three categories or broad categories for today. The first is motivation and benefits for existing insurers. And then we will move on a bit to discuss a bit the digital technologies around the platform ecosystem. And in the end, we will also see how this digital platform ecosystem impact growth, penetration, and financial inclusion. So maybe I can start already with the first question with Simon. So in your opinion, what are the key features of a digital platform ecosystem in insurance? And in your opinion, do you think insurance companies should pursue them, should engage with them now? What's your view?
Yeah, so thank you, Alex. Yes, so let's just be really clear what we mean by a platform or digital platform ecosystem. So platforms are types of business models that connect people who need things with people who've got solutions to those needs. And when they work at scale, they can be incredibly powerful. So the biggest companies in the world now are companies that have worked out how to create platforms, and then they've created ecosystems, networks of consumers and partners and suppliers around them. And those companies are like Apple and Google and Nvidia increasingly, and Microsoft. So the most powerful business model in the world, because it leverages the capabilities of digital technology, is a platform business around which ecosystems are developed. So the vast majority of insurance companies do not operate in that way. And Ping An is an outlier that we'll hear about later on. But other industries have adopted this approach and they've grown very fast. So what that means is that we expect, or many analysts expect, more and more of global trade, global activity to happen on digital platforms within ecosystems. And that the proportion of business that is being done, mediated by these platforms, is growing really fast, something like 20% per annum. And it could make up 25% of all economic activity in about 10 years' time. So it's a huge trend. This is the way that people and businesses are interacting and trading. And so for the insurance industry, we want to be part of that. We want to either adopt and adapt that model to ourselves to serve our customers better. But also we can see these platforms and ecosystems as new channels in which we could distribute our products. And the reason why this is so important and why it's such an exciting topic is as follows. Firstly, from the insurance point of view, the industry has been flat in terms of its revenues as a proportion of GDP for decades. It isn't really generating as much value as it could do. So it's okay, it carries on, but it's still flat. So it needs new ways to grow, new ways to improve its business model if it wants to increase the value that it offers the world. Secondly, there are enormous protection gaps, as you've talked about a lot at Geneva Association. So the gap between the coverage that people really need to be economically stable and what they have. And the global insurance protection gap is almost the same size as the global industry today, about $6 trillion. So you've got, if you like, a flat industry, insurance industry. You've got huge unmet demand by the world for coverage, which we are not able to service. And then you've got these new types of businesses, platforms and ecosystems where more and more people are interacting. So if the insurance industry can integrate with those platforms and businesses, it should be able to reach more people, close those protection gaps, and then grow its business and its value to the world. And I'll just finish, if I may, with one example that brings this to life, that shows the potential. And this is Alipay in China, which is some people call it a super app. Essentially, it's a platform business which has an enormous ecosystem, has over 1 billion people that use it every day. And they have incorporated insurance into their proposition. And they have, as a result of that, they've brought into the insurance world nearly 500 million people, rural Chinese people who would never have any coverage before, because the traditional industry could never reach them profitably, directly or through their normal channels. So Alipay, because it's got a large customer base, worked out how we could offer specialist coverage that people could afford, and it worked with 90 different insurance companies to create these micro products that enabled more people to be covered. So that's a golden example of a big digital ecosystem, Alipay, closing protection gaps for hundreds of millions of people and orchestrating supply from multiple parties, using the data and the insights that they had around their end users. So I'll just end with that as a really prime example about the potential for digital ecosystems to create new demand for insurance and cover many more people, and helping Alipay, the brand or the digital platform, improve its business model by providing attractive insurance services along with all the other services that they offer.
Thank you very much, Simon. I certainly share the same enthusiasm as you have with this digital platform ecosystem. By the way, I'm also the Alipay client. So since you have mentioned the value proposition that the platform consider insurance to integrate insurance and deliver to customers, maybe next we talk about a bit the customers, and then I come back to the insurer. Dr. Xiao Jing, would you like to share some of the Ping An's view to say what could be the benefits for customers? What is the most important benefits of the platform ecosystem for existing insurance customers and potential insurance customers? What kind of value that this ecosystem can deliver to customers?
Yeah, Thank you for the question. With the digital platform, we build an ecosystem, and then we can provide a variety of services to each of our customers. I think that's one of the primary benefits. We can cater to customers' diverse and varied needs. Provide all kinds of services in one platform. We call the one customer multiple kind of services, and we create hassle-free and time-efficient and also cost-effective services through the digital platform. For example, an ecosystem can consolidate a wide range of financial services, including banking, insurance, and also securities into one platform. And also, we provide various lifestyle services, including healthcare, elder care, and also other lifestyle services under one platform, so that we can meet the broad needs of the customer, and we can help our customers to benefit from the lower cost and higher efficiency, and also the better services. I think that's the benefit to the customers.
Thank you. So after analyzing the demand side, I will come to the supply side. Camila, may I ask what in your opinion why insurance companies are interested in working with the digital platform ecosystem, or developing our own platform ecosystem? I think you need to unmute.
Simon is a tough act to follow because he articulated it so well. We at Chubb 7 years ago, or even 8, saw an opportunity for customer access, because these digital platforms that we're talking about provide us with a broader customer base and an expanding market reach and revenue growth potential that we wouldn't otherwise access through traditional channels. We often have computed that we are now reaching more than 600 million customers that were previously underinsured or not accessible to us, because we work with the largest super app in Southeast Asia, and we have provided services through ride-hailing. It's a ride-hailing turned super app. And so we are more in a multi-supplier ecosystem, is what you call it, in that we are the experts on insurance. So we add trust to the distribution partner, to the platform, that the services they're providing come with confidence and protections for their customer base. We narrow the financial gap. As Simon stated, there's a lot of underinsured and unreachable market through the traditional channels. In fact, Swiss Re estimates it as the equivalent of 400 billion in premium. I didn't have the Geneva Association stat handy. And then last but not least, it has pushed us into a co-developer role to expand product offerings and create products that haven't existed before, because some people might be underinsured or uninsured because they don't have something that is contextual to their lifestyle or through their specific needs, which again, Ping An has very cleverly solved for the Chinese market with some of their digital health offerings and such. So we have also co-developed with partners to address specific needs of the customers. And so it gives us a better view on the demand side and how we can supply. Also, there is vast amounts of data on these ecosystems that was not as easily mined for insurers before. And so we can better have insights on buying behavior to customize the offerings. And so for us, it has been a great way to have additive incremental revenue growth. And we're one of the revenue engines of the company.
Yeah, that's important. The new customer and new revenue channel. And last but not least, so we know that from the customer and from the insurer perspective, but we still want to know something about the from the investor perspective. We also have a venture capital or private equity investor, Johannes, with us. So in your opinion, why does the investor interested in investing in insurance platform ecosystem?
Well, I mean, the most fundamental reason obviously is to make money, as any investor will want to do with any investments. For us, as sort of like a more specialized investor, I think we have more of we have more interest in just making money. So obviously we want to also, enable the group to grow, especially in those kind of digital ecosystems. So for us, it's really about creating win-win situations between the company that we invest in, the platform, and us ourselves to make a financial return, as well as the Allianz, and in our case, the insurer, to boost revenues or help them in other ways from the investment. And so for us, I think the interesting part there is that we can create sort of those win-win-win situations by our investments in the company, right? So we win by sort of, it's a bit like cheating in the sense that us having this business relationship with the platform, sort of securing in a way the future growth of the company, by the business partnership. And then us as investors, obviously, we will profit from the growth of the company as equity investors. So this is, I think, where we can provide, a significant edge above compared to other investors, because we can bring those partnerships and help really the company grow organically as well. And I think ultimately it's about helping the company really achieve something that they couldn't just do themselves. In that sense, right?
Right. Thank you. Thank you very much. We now maybe shift a little bit the focus to the digital technologies, given that this is a topic that require quite some digital capabilities, so that we can really materialize the benefits of the platform ecosystems. Earlier, one day that Simon mentioned that Ping An is actually the 4th largest AI patent owner in the world. So comparing to a lot of technology companies, Ping An as an insurance company has a very large AI patent owner. Well, Jing, in your opinion, what kind of technologies, maybe AI or maybe something else, are required for an insurer to develop a proprietary platform ecosystem? What technology are you developing at the moment?
Yeah, thank you for the question. Yes, Ping An actually is the number one patent applicants. I think it's not really the holder yet, but we applied. We have disclosed over 52,000 patents, tech patents, and so we ranked number one in fintech and health tech, med tech, and in AI, we also, I think, ranked top 5 in the world. So for the digital platform, the majority of the patents disclosures we filed are in 3 different fields. One is cloud computing, and then two others are big data and artificial intelligence. The reason is because most of the digital solutions are actually deployed online, so need to be provided online services. So we actually developed a lot of cloud computing technologies, and to have the digital solutions, we need to have good foundation for the data. So we actually develop also many technologies for big data, including platform and also analytics. And also to construct those digital solutions, we need a lot of AI technology. So we also developed a lot of patents, technologies in artificial intelligence, including computer vision, speech recognition, and also natural language understanding, even the recent large language models. Actually, in generative AI, we also rank top 5, I think, in the world for finding the patent disclosures. Yeah.
Thank you, Jing, for sharing the secrets of Ping An, what kind of technology. So Camila, when you develop the Chubb Studio, are you using similar technology or you have other recipes to develop your system?
Yeah, look, Alex, we are known as an underwriting company, and we want to be known as an underwriting and engineering company. So we have been investing heavily in talent to thrive in the digital age, including getting skills from data scientists, analytics engineers, marketing developers, product owners, and such that are typical and classical in running a digital platform. So it's not only the AI, but also how do you do the user interfaces? How do you do the A/B testing? How do you do the design so that the platform is engaging or the interfaces? And so Chubb Studio is a great example of innovation and collaboration. We launched it in 2020, is now live in over 35 countries, and it has allowed us to develop and test our insurance products and services in a multitude of ecosystems. Some are e-commerce, some are ride-hailing and mobility, others are prop tech, and we bring our strong insurance product suite and underwriting knowledge to bear, but we have fused it with APIs to overcome legacy issues. And we even offer software development kits to our partners so that they can embed in their apps or microsites without having to invest as much engineering on their side. So we bring the insurance expertise, and we can also bring the development and engineering expertise to collaborate. I think unlike others, we're very business execution and top and bottom line result focused. So we always pay a lot of attention on how will this product and this collaboration make money. We have delivered locally. It is a global platform. So we have kind of global standards and a core global team, but we have a lot of flexibility to localize so that we match the needs of the 54 countries in which Chubb operates. I don't think we have digital partnerships in each and every one of them, but we're at more than 35 already. We have a startup mindset, but the financial strength and resources and discipline of what is the bigger Chubb. And technology is only part of the story. We need to collaborate with the partner, iterate, and make sure that the solution addresses a need and a pain point of the customer base. So we're trying to reimagine what insurance does and how it does it with more engineering, more analytics, more AI.
It seems that you're carrying the technological or how to say technological efforts from your partner to yourself. So developing such a system, how many people do you need? How many people do you have working on this?
In our investor dinner, we have said is about 1,000. About 350 are more dedicated to the digital development of the propositions and the software development, and the balance is more dedicated to the analytics. not just for the digital channel, but broader.
Right. Thank you, Simon. Yes.
Yeah, so what's really interesting is that Peter Ma, who was the founder and CEO of Ping An, over 10 years ago, what was really interesting, he said, we are no longer an insurance company. We're going to be a tech company that has financial service licenses. And just by the leader saying that, a bit similar to as Camilla's just saying there, we're going to be a underwriter plus engineering. That statement is really important because then it makes sense that Ping An is one of the world's biggest patent holders in AI, for example. If we're just an insurance company, why would we ever do that? But AI is the key technology now for the insurance sector, because your question to Camilla was, how many people do you have developing this? You said 1,000. What AI can do is give people 10,000 workers without having to hire any humans. So suddenly, insurance is along with banking, is the industry that has the biggest potential to be augmented and automated with AI of all sectors. So that gives us the power to do things that we never thought were possible before. And particularly with the new development of what's called agentic AI, where you have essentially digital employees complementing the work of human biological employees. And if you imagine that something like 50% of insurance companies around the world do not make any economic profit, that's profit after cost of capital. In some cases, a very old industry that has been operating with legacy systems, old ways of working, old ways of thinking. But AI allows it, in the way I described, to break out of that, or gives it the potential, let's put it that way. And particularly when you're integrating with third-party ecosystems, as Camilla says, that has a lot of data that you could take advantage of. Of course, AI loves data. The more data you have, the more things you can do. So I would say the biggest opportunity for the insurance industry is to really embrace AI, like Ping An has done. But if you haven't done that, you're going to be left behind. You've got to race ahead fast now if you're going to be successful in this world.
Right. So I think AI can do a lot to replace human, but well, in terms of developing the platform ecosystem, of course, AI can provide a day-to-day service of the platform ecosystem. But in terms of developing the system, so do you also believe that AI can do something?
Yeah, because you can have, rather than 1,000 developers, you can have 5,000 developers, but they're not humans. So you can therefore do things much quicker in ways that you hadn't thought before for near zero cost. I mean, that's the point. That's why we can't hire another 1,000 developers, or it's very difficult. We can't attract them. They don't want to leave Microsoft to work for an insurance company, but you can replicate those people using AI. That's the really exciting thing that we haven't really even contemplated yet. The ability to have digital workers alongside our human workers. And that gives us, because insurance is a knowledge and information intensive industry, it gives us then powers that we've never had in the past to do new types of business models, which essentially is what digital ecosystems are.
Thank you. So Simon, you and Camila have mentioned a lot about the financial inclusion. So the platform ecosystem can actually reach the customer that was underinsured before. Maybe I would like to see your view, Johannes, with the platform ecosystem as a new digital channel. So what kind of new growth opportunity do you see for the insurance companies?
I think insurance industry always had the issue sort of that insurance in itself is not a very attractive product in that sense, right? I mean, it's always about insuring something that goes wrong, or like something goes wrong, you want to be insured, but nobody wants to think about topics, or things that can go wrong, right? So this is why nobody wants to think about insurance ordinarily, right? So for an insurance, the toughest challenge is, I think, the distribution, to see how can we make it as comfortable and convenient as possible for people to think about insurance and to buy insurance. And I think this is where those platform ecosystems come into play, because you want to grab the customer at the point when they think about insurance, right? And if they think about insurance when they're sitting at their home on the couch, right? I mean, it's very difficult for them to convert those into sales, because they need to get up. In the old days, they had to drive to the town, to the next insurance salesperson, talk to them, get an insurance. Now it's much easier, right? They can just open their iPad and get online. But still, even there, would need to go to some insurance, at least an insurance comparison website or something. But the true goal for an insurer is, I think, to get the customer at the point of sale when they have like adjacent topics where insurance all of a sudden pops up, right? Let's say you are in the process of buying a car, and then obviously at that point you need to have a car insurance, and at that point that's the crucial point where you need to make contact to the customer as an insurance company, and the platform ecosystem provides that for you, right? So this is, I think, where the true value for those ecosystems come into play for insurers and for us as investors, obviously. And because, like, speaking again from an investor perspective, right? I mean, this is what we're trying to achieve with our investments, to have that strategic influence within those ecosystems to steer them towards creating those opportunities in the first place, right? So maybe there are already business relationships in place, but then we as investors come in and say, hey, can we open this up to more angles, more touch points for our products, and even create new products in that sense, right?
Yes, given this vast potential of growth opportunity, I would like to ask a question for all of you. That is, in your opinion, maybe in 5 to 10 years, what percentage of insurance business is likely to be transacted via the digital platform ecosystem? I've shared at the beginning that some of the market research institutes said it's 3 to 5%, and now or maybe by 28 or 29. But I would like also to hear your views. What could be the percentage of business transacted via the platform ecosystem? Let's have a number there.
I can kick
yes,
off
please.
if you like. I actually just finished updating my they're projections for the potential of what we could call it embedded insurance in this case. So it's embedding insurance in third-party ecosystems and brands. But on current trends, you've got current companies who are offering or who are embedding insurance in third-party brands. They're growing at about 15 to 25% per annum. And so if you project forward, we could see about 15% of total GWP being created and distributed through non-insurance channels in about 10 years' time. So that's over $1 trillion. That's a very significant amount. And it's very low today. It's probably, apart from bank assurance in Europe for life, it's maybe 1 or 2%. But it is growing. We're seeing the growth very fast. Companies like Allianz Partners, part of Allianz Group, they're growing at 14%, much faster than their core business. And so they're due to double in just a few years' time. So something in the region of that amount is what is possible. But what I think is going to catalyze it is the impact of the next round and development of generative AI, which is just going to make it so much easier. So that's not my forecast, but that is the potential. And that's why it becomes collaborating with non-insurance channels becomes a very, very important part of the strategy. Whereas today, apart from for companies like Chubb and Ping An, it hasn't necessarily been the case for most companies.
Right. Who want to be the next? Camila, would you like to share some of your views?
Yeah, sure. I second Simon's point of view. For Chubb, we did our own proprietary research called the Digital Wallet Race. So it was specific to digital wallets. And we found that nearly half of the respondents thought that digital was the obvious way to buy insurance, and more than half, almost 60%, believed that they needed more insurance. So these were people who are active in digital wallets and apps. And we also found that the financial institutions that we surveyed, so this leans more on bank assurance, were expecting to derive 10% or more of revenue from digital bank assurance. Now, having said that context, for us at Chubb, our digital business revenue is less than 5% of our total group revenue, but we are the fastest growing division of the company with over 200 platform distribution partners. Do I expect that to get to 15% in 10 years is what Simon said? Well, maybe. Hopefully we can at least attain 10% of the total revenue, but we're a very large organization and we have other growing areas like Climate Plus and other niches that we're expert at. So yes, I'm bullish on it. This is why we have a digital business division. And we have been the fastest growing, but we're still at less than 5% of our total group revenue. So it's a question of how quickly we can continue to grow profitably. Because we will always be very underwriting disciplined on how we go about it.
I think from my perspective, it's more of a product question. Like some products I think will benefit a lot from the digital ecosystem than embedded insurance, which is like very low complexity products, just like an iPhone insurance, like, or like like device insurance. I think there also you could argue that it's sort of like a new market and a lot of people are technically underinsured, you could say. I think there is going to be a lot of catching up in that sense, but I think the more complex products will become, I think the less, from a pure distribution perspective, there will be, also growth. I mean, bank insurance was mentioned as one angle, but ultimately, I think when you come to the topic of being digital, I think this is one of the segments where I see the least growth. I think that the highest growth and the largest increase in absolute revenues is for those low complexity products. I think there is still very high potential.
Jing, I know. Yes, go ahead. Ping An has not only a digital platform, but also non-digital ones, right? Platform ecosystem, all types. So what's your view?
So I don't have the precise number, but I can see that almost all the major procedures in our insurance business are involved with the digital solutions. But as Simon earlier mentioned, right now the AI technology, digital solutions still mainly for augmentation, augment the human capability, still not be able to end-to-end replace most of the positions. So I cannot say one business used AI digital solutions so that 100% of that business is contributed by AI digital solutions. So I don't have that number, but I can see that almost all the major business in Ping An has already applied to some extent some kind of digital solutions, and in recent years, AI technology is developing very fast. So in 5 or 6, 10 years, probably many of the positions will be even end-to-end completely replaced by robots. So not only a company like assistant, but even replaced. So by that time, the percentage is much higher. But right now, it's still mainly augmentation. So it's helpful, it's useful. I think the only 3 major scenarios that digital solution may not be able to completely replace. One is like a road assistant, right? Roadside assistant. You have to send the car and and then a lot of offline work need to do. Robots cannot do it. And also, a second type is like those VIP customers, or like some customer like to complain a lot, like some old senior customers. So those for those small group of customers, the special scenarios that we will not try to even develop a digital solution for them, because it's not a right choice for these kind of customers. And the third type is there are some scenarios that's not worth doing the digital solutions. For example, some scenarios, the customer volume is very small, and to develop a digital solution, you need to invest a lot of time and effort and money, and probably the benefit is much lower than the cost, and then we will not do it. So besides these situations, I think majority of the business procedures will be replaced by digital solutions. Yeah.
Thank you, Jing. I think it's also the time for us to discuss a bit with the audience. I've seen many questions coming through. So maybe I pick the first one from Frank Chuan. He asks, what is the blocker for having an industry-wide unified platform instead of every insurer investing its own ones? What is the blocker to having an industry-wide unified platform? So that's a question from Frank. So maybe I address this to Simon.
Yeah, well, it's competition and antitrust, isn't it? That's so. I think we could probably move on from that question, but that's the fundamental issue there.
Yes.
Right.
Yeah,
I think technically there's no block. Technically, there's no block. The fundamental of the technologies and platform services are very similar across different insurance companies. So yeah, technically it should not be a block for digital solutions, digital platform. Yeah.
I mean, one could argue that, you know, insurance comparison platforms are sort of exactly that, right? I mean, you have one platform. If you want to have a car insurance, for example, then you have all the insurers on that platform. You have very comparable products there. The platform helps you compare those products. This is, in my mind, you could argue, this one platform for everything, right? But, you know, I agree with Simon as well, right? I mean, ultimately there will always be competition. So it's good that you don't have that one platform.
Yes. So I have another question from Powell. Can insurers act as orchestrators in the platform ecosystems? I think that's we will have someone answer that for sure. Is this feasible in Western markets in key areas like motor, home, health, or financial well-being, where they lack dominance and face strict data protection requirements? I think Ping An is clearly one of the orchestrator, but also, our audience also asked what's the possibility in Europe. Maybe Jing, you would like to take this first, and then Johannes and Simon to see. Yeah.
So I think that the digital platforms should not have a barrier. I mean, like based on locations. So I think in Europe, the insurance business is not exactly the same as the other area, but the core is similar. So I think the methodology is the same, building the digital solutions, digital platform. So I don't see any problem to construct a digital platform in Europe market.
Simon?
Yeah, it depends what type of platform we're talking about. So if this is an insurance brand trying to orchestrate multiple services to its end customers, then as Jing says, there's in principle, what's to stop you. But in practice, of course, the knowledge of, well, you've got a lot of other brands and platforms that already exist in mature markets. So trying to enter those markets yourself is going to be a challenge. And secondly, the mindset of orchestrating not only your own services but third-party services is very unusual for traditional companies as well. So unless you do what Ping An did, which is to either create or buy non-insurance platforms in automotive, in healthcare, in real estate, and then use those as channels to distribute your own insurance, then as we'd heard from Johannes, not many people think about an insurance company as a place where you go to access lots of exciting services beyond everyday insurance. So in principle, you could, but it would take quite a big change of mindset to do something which is out of the common way of thinking within particularly European insurers today.
I mean, from my side, just one picking up on the data protection aspect of the question. I think, especially in Europe, data protection is a very big topic, and personally, I think it's also a good topic to discuss. But I think the problem is sometimes companies, insurers faces where you would like to, bring together that data from different sources, but you can't because of those laws. But would end up being ultimately beneficial for the end customer, because you, for example, could improve your pricing, making certain policies cheaper because you have more access to more data, but legally you're prohibited to do so because of data protection laws. And this is, I think, some of the examples where sometimes the regulation is a bit too, while the intention is correct, the result is that the end customer is actually hurt because the company can't access the full wealth of data that they would like to do. So I think this is sometimes sort of like a hindrance in Europe for creating larger platforms, because even if you build them, you can't really truly leverage the entire wealth of data that you can collect.
Right. We have our next question from Mark Simpson. To what degree do insurers need to change their orientation from insurance products to much broader risk-related services and asset enhancing services? So, and avoid the risk of just building a digital platform version of the current limited insurance solutions. So what kind of additional services that insurance needs to develop?
Yeah, well, so I'll kick off if you like. So yes, absolutely. As Mark says, quite rightly, most or many traditional insurance products are not very attractive or compelling for end users. The experience often with claims is not very nice, and the products are not very tailored to their real needs. And that's because it's difficult to create a standard product that you can sell en masse at a profit. But by collaborating with third-party brands that understand their end users better, the example I gave before with Alipay, that have a lot of data about their users, then you can then create unique risk solutions for end users that could be not just risk transfer, but could be other types of protection and prevention solutions as well. And that's the beauty of collaborating with non-insurance digital platforms and ecosystems, because you can take advantage of their data, their ability to reach and connect with end users cost effectively, and then you can create unique risk solutions that serve their needs. And without that data, that ability to test ideas with customers, the ability to reach them cost effectively, then it's very difficult for insurance companies through its traditional channels to offer more sophisticated risk solutions beyond very standard vanilla products. So we're seeing there's a lot of case studies of companies working very closely with third-party platforms to create completely unique, customized, personalized solutions, which are also very profitable, like the example I gave with Alipay.
Yeah, let me dovetail that. For Chubb, we have reorganized structure follows strategy in consumer groups so that we cut across lines. So not just to offer a standalone product like many insurance companies do. And then on top of that, in our partnerships in digital, we have enhanced the products with other value-added services, be it telemedicine as an option for some of our personal accident covers, or certain cyber protections for people who are buying cyber insurance because they may benefit more from having antivirus than they see the risk of actually having to have a cyber claim. Because we're a large residential player in the US in particular, we bought our own Internet of Things sensor company. And so we can offer the sensors pre or post loss for people who have had a non-weather water event in the home. And so definitely we're thinking beyond product and more around what are the consumer pain points and needs that an insurance company can address via services or via more traditional insurance protections. And it's also not just the pre-underwritten simple product like Johannes had mentioned before, but the digital channel serves as a lead generation for more complex risks and services that need human intervention. And so that has been another byproduct of opening up new channels to engage with consumers.
Yeah.
Right.
Our
Yeah,
customers
go ahead.
need all kinds of services, not only financial insurance services. Like for example, in PI, our customers also need elderly care services, medical services. So we cannot build on our own such services by ourselves. It's a very professional area. So we actually work with other service providers in many different directions and to build the ecosystem together. Yeah.
Right. We also have another question from Ashish Kanakia. In my personal experience, working on health ecosystem from insurance companies, I find there may be challenges for customer uptake. So how would we increase enrollment even for existing insurance customers? So how to boost the uptake of insurance in the health ecosystem? I think that's also Ping An's expertise, right? So you have a large health ecosystem there.
Yeah, we are actually trying to learn from United Health. Yeah, United Health is a very successful example of combining insurance and healthcare, medical care. And we actually try to learn from them and how to combine the medical care, healthcare together with insurance. So we build our own ecosystems in healthcare area, but also collaborate with the third-party healthcare medical care services, so that we can provide the low cost and the high quality services to our customers, and also give the enough choice so they can have a very good choices, options to choose from. And we also work with a lot of lifestyle service providers and also elderly care service providers, so that we can take care of our elderly customers better. Yeah.
Thank you. Thank you. I think we will probably have the opportunity to have a last question. Let me see. Maybe one question for Chubb. How does Chubb decide which insurance products to display on the Chubb Studio? How can customers compare different insurance products on the platform? And do you also promote other products from other companies?
I answer the question to on the chat, but I'll
Okay.
answer it verbally as well. Chubb Studio is a business to consumer platform. So the decision is jointly made with the partner, or although there is a module that allows them to configure of all the product suite that we have on the shelf, which is pretty extensive, given our product breadth and geographic reach. What combinations does the ecosystem partner think makes the most sense for their customer base? And it has to be contextual to the transaction. So it's different if they're in a digital wallet, we might offer something very different than if they're buying a luxury watch in an e-commerce platform. And so we decide jointly with the partner what are the best campaigns and promotions that would appeal to the customer base contextually to some other transaction, because that's the beauty of embedded insurance. And that's when you get attach rates and response rates that make it feasible to pay for the engineering. And so it's a collaboration with the partner deciding of all the product library that we have, what makes the most sense. And sometimes we will do a bespoke solution, a product that hasn't been created before, that is specific to that partner, to a specific transaction where they need to add more trust and protection onto the transaction. So thank you for the question.
Thank you for the answering. I think we have still some more questions, but maybe we can address them after the webinar. Now, I think with the last 5 minutes, I would like to give the opportunity for each of the speakers to summarize their key message would like to share with the audience. Maybe we start with Camila.
Okay, I think the closing thought is, look, there's a lot of great potential for distribution of insurance digitally, and it has to be contextual to the ecosystem where people are spending the time, whether that is a super app or whether there are other destination ecosystems. Ping an aside, I don't think there are many insurance destination ecosystems. People are spending the time elsewhere. And so we have to see where can we be contextual and how can we reach customers where they are with a consumer-oriented proposition that provides them the protections that they need so that we close some of the insurance gap.
Thank you, Camila. Simon?
Yeah, I echo what Camila says. I would say if we think about the fundamental economics of the insurance industry, it is a low growth, or has been a low growth, very low margin industry. And therefore it's very cautious about what it does and how it develops its business model. But we heard also that there are protection gaps which are almost the same size as the existing industry today. That means there's untapped need out there in the market, but the industry is not able or has not been able to address that. So in principle, it could double the size of itself if it addressed all the protection gap. So what we're talking about today is collaborating with other organizations that have closer relationships, deeper knowledge and more data about end users than we in the insurance industry do, and leverage those relationships, that data, those ability to interact with end users, to understand their needs, to be able to distribute new types of risk solutions that address those unmet needs and help people be more resilient as they go about their daily lives. And the key enabler for this will be generative AI, which allows us to do things that we never thought were possible before and dramatically improve the margins on our business. So I feel very positive that there's an opportunity to significantly grow the value of the industry to the rest of the world if we think differently about who we collaborate with, how we collaborate, and how we exploit technology.
Thank you, Simon. And Johannes?
Yeah, so just from my side, I think platform ecosystem, I think they provide a good way for insurers to stabilize and diversify the distribution streams, and we as investors, we are really doubling down on the existing business relationships with our investments, but we also try to create new models to help both platform as well as the insurer to move forward. But in our mind, the execution of the investment thesis is really crucial, because the more complex the distribution structures are, as well as on the investment side, the less likely there is a beneficial outcome for the parties involved. So for us, we really try to make sure that to create transparent and straightforward investment structures as well as distribution partnerships, so that every party can win in the transaction.
Thank you, Johannes. Last is Jing. I think you need to unmute.
Sorry. So I think the insurance platform ecosystem will play a very important role in the insurance industry and push forward the industry. And but I think it's not easy. So a customer-centric, value-focused, and also long-term strategic commitment are critical to the success of such ecosystems. And in China, there's an old saying, says 1,000 miles of journey start with the first steps. So I think every institution should think about this and move forward. Thank you.
Thank you, all of your all the audience and speakers for your insightful messages and discussion. So I think now comes to the end of this webinar. I would like to remind all the participants and audience, while you exit the meeting, there will be a pop-up survey. Your opinion and feedback will be very important to us. And we look forward to see you in the next Geneva Association event. Thank you all.
Thank you. Bye-bye.
Bye-bye.